One more, maybe. I think you got another candidate.
Your one of your favorites, CRM.
Okay.
Finally,
All right. All right. Now we're talking. Okay. Everybody's out here playing all these memes, and I'm like, all right, where's my Salesforce breakout? And here we
Yeah.
are. It's like, all right, okay. What do you got here, Em? You
So
know I'm
it's
on board, so I'm an easy
yeah,
sell here. But
kind of like the same scenario, bull call versus bear bull put, and CRM finally broke out of this range, and we were looking at it. We've had this on the scattering report for quite some time. I think we even tried to short it, but we were like, nah, we can't. Nobody
No,
could
it's
find the heart to short
Salesforce.
it,
A
right?
penny off.
So same kind of scenario, and it's funny that they're both priced about the same as DocuSign, but kind of same scenario, bull call versus bull put. And with CRM on the bull put side, Matt, I've got, let me make sure I've got my dates here correctly with CRM. I've got, let's
Tim,
see.
can you give me the link for the Theta Research spreadsheet?
yep, I'll go grab it.
On CRM, we are looking at the same
And the link
March.
to download for the community if they don't have access to it. I have it on my end, the actual spreadsheet. Sorry, Em.
No problem. Same March 1, March 5th,
Okay.
weeklies. And with CRM, we're going to go 205, 195. So go,
Okay.
give me March 5th.
Oh, I am. I'm on March 5th.
Okay, never mind.
You're looking
I'm
at
looking.
YouTube probably.
I'm sorry. Yeah.
I do it all the time.
We're looking at 205, 195. Picked
Okay.
up a $1.12 from when I built this earlier.
Yeah, we're still getting $1 for it. It's fine. It's 10%.
Yep. Put your break even at 203.
Okay.
And you're well below the 200-day moving average. You're well below that support level. Nice little premium.
And if I didn't love the reversal pattern and the breakout here so much on Salesforce, I'd say really, really, really good trade, but I'm going to love your bull call. So
Yep, the bull.
I like the bull put, but I love the bull call. So I'm just going
Yeah.
to, but honestly, the bull put, nothing to see. You're underneath major support. Support's going to fight for you. You got the ROI, the probability and the range. There's nothing wrong with that. But if you don't want to release a Kraken and open up that risk graph in a conservative formation with the bull call spread, then yes, the theta trade on the bull put side is perfectly fine. There's nothing wrong with it.
Yep. And
you do have earnings to navigate, but it's the same conversation. You try to take you're using theta as a way to still trade it directionally to a certain extent.
Absolutely. And on the bull call side, I am looking at the March monthly, so March 19th, 45 days out.
Mm-hmm.
And I'm looking at the 240, 260. I'm going to go 20 wide because I really want to capture that move.
You're going 240, 260?
Yep.
I would open it more myself.
I like to trade more. I want to open it up more. So yeah, Tim and I had the exact same response. Tim, go on your response.
Well, here's the thing. I mean, if you're going 240, 260, and by the way, buying the 240 is a bull call spread. It's the anchor call in your spread. Nothing wrong with having the first out of the money there at a 51 delta. That's standard. That's part of our playbook.
That's standard trade.
Part of our playbook. We usually like to get about a 25 delta difference to capture these delta moves. And that's going to put me down closer to the 280 or the 290. I actually don't mind the 290 here. It's only a $1.40 difference from the 280. You could go either way there, but that would give me a 50-point spread between 240, 290 is kind of what I'm looking at. $13 on a 50-point spread. I mean, I'm talking about less than
wait a second,
30% of the cost of the spread.
I said open up the risk graph. I didn't say sell out of the money put options to buy out of the money call options.
No.
I didn't say that.
You're in the wrong expiration. Hold on. I'm in June for the bull call.
Oh, I thought we were working in March.
I like the June bull call. Sorry, I must have missed you guys in March.
I was like, what are you doing?
I'm looking on my own side of it, but.
So here, okay. So you were looking at
I like the June, which gives me about 4 months of time, so I don't have theta concerns at all. I think this one could be a position trade.
Because I was looking at your numbers, I was like, wait a second, I'm not following here, bro.
No.
Okay, so hold on. Let me map out M's trade first.
Sure.
Let me go back to the March, And so M, you're looking at 240. So you're
Mhm.
March 240 by which was it?
260.
260. Okay. And okay, so you're gonna be paying about a $6 debit.
Mhm.
Okay.
So $6
And
on $20. All right. There's nothing wrong with that either.
no, it's fine.
That's
I mean,
fine.
it's fine.
Hmm.
There's nothing wrong with that. You're paying $6. You're reducing your cost by about 40%. You probably want to try it. Yeah, I mean, it's doable. So let's go out to June, Tim. And you're going to do the same 240 contract, right?
240, 290.
And you're
Yep.
doing 290. And the 290 gets you, we'll just, okay, so we got 240. So that's going to be about 13, but obviously you're getting a lot more time there.
And there's a big window here. 13 on
Yeah.
$50 gives you, a good open-ended, not open-ended, but a good reward
You're
to
opening
risk.
the risk graph far
Mhm.
more, which means you're going to capture a lot more of the price appreciation. Now, can I play middle ground with you two for a second?
Absolutely. I'm looking at the pattern. So this
Okay.
is the fun part of option trading, right? Because there's a lot
Yeah.
of different ways you can get in there, start building these things.
Both
Yeah.
trades are fine.
Mhm.
What I'm going to say on neither trade is fine. I'm just saying you got a nice little resistance level at 270. You can split your 260 by 290 and use technical analysis to determine where you want to sell. And so I like the 270 here.
Okay.
In selling. And so if you're looking at that, if you're doing the 240 by 270 here, you're not opening up the risk graph as much in the June option because you're only getting 20 delta points there.
Mm-hmm.
So if we go down to the May option and we do that 240 by 270 trade, 240 by 270 trade, you got about 21 there. If we come down to the April contract, now we're cooking, guys.
This is
Now
interesting
we're
here.
cooking. We got a 48 and 22. We got a 26 delta difference there. That's your trade. Your trade is the April. We're splitting the June and the March. The trade is the April 240 by 270. That allows you to cover right about 35% of the trade cost. But so you're not covering as much of the trade cost as you would like to by doing a little bit more time T. But I think you're getting a better technical read here. All of them are good.
I like all three.
All of them are good.
Mhm.
Based on after the conversation though, where do you guys lay? Do you like Em? Are you still on the March? Tim, are you still on the June? Am I still on the April?
No, and now I'm starting to lean April. I'll tell you why. I was thinking about this as a position trade. I love the breakout. I like the delta play. I don't think the bull put would be where my head would go on this particular one. It's a question we always got to answer: bull put or bull call, right? If you're a spread trader, if you're trading options and whatnot. But I do like the delta play here. March was a little tight for me to get what I wanted from a risk graph perspective because I want the distance in the strikes, right? I want the potential to hit this one.
You
Yes.
think CRM's going to the moon?
I don't know if I got diamond hands or not, but
no, you're doing a bull call spread. You don't have diamond
hands, right?
You don't have diamond hands.
We're doing learning all the lingo.
A risk adverse trade. No, that's not diamond hands when you're talking about covering risk and lowering cost. No, at least I'm not even sure what diamond hands. We might just be sounding like my daughter called us last night. We were playing Among Us, Em, with my daughter last night, and she died. And on her way out the door, boomers.
Couple of boomers,
right? So we might be sounding like that right now too. Like we don't I don't know how to use that slang, but I do like the April though.
I'll tell you why April.
I like the April. Now it does have earnings coming up on February 22nd, so I'm not going to hold it through that. But yeah, I definitely like the April.
That's why I like April more than June. The more I think through it, the fact that earnings will be there. I don't play bull calls as earnings plays, so this is a directional play up to the earnings. I think, April makes sense to me.
Yeah, so. You're not holding the directional trade through earnings like you may a bull put. You would write something else against it, but Yeah, you're definitely selling this before earnings. I like the April contract. If you're gonna play that bull call, I do like the April contract here.